Hello, I am Klaus Andersen and I got a question about bar counting, so I just wanted to touch on it real quick and give my perspective on how I count bars. Just wanted to say there's no real right or wrong way to count bars. If you're counting in one way and it works, you make money, then that's the right way for you. If you're counting and it doesn't make you money, well, then you should probably consider getting some inspiration otherwhere on how to count bars. Just on this is the 5-minute chart. This is a portion of a trading day in the DAX. And when counting bars, when counting first entries and second entries, what we are really counting is the bulls and the bears fight for the always in direction, fight for the field position if it was American football, or fighting for direction in the markets. Here we have a push up, and up here buyers stop buying, or at least the market favors the bears. There are more bears selling than there are bulls buying, so price goes down. Could be bulls taking profit, but the minute they start taking profit, that makes them sellers. So more sellers than buyers, which means the market goes down. It goes down here, market hesitates, bulls tries to recover. What bulls are hoping for here is a new leg up, first entry long. Also, it could be some of these bears in here that buy, but the second they buy, that makes them bulls. So price bounces a bit, and then you see bears enter the market again and price drops. And down here bulls finds value again, and bears start buying back their shorts, and that's what turns the market around. Now there are more bulls than bears in the market. That's why price goes up until you reach another area of value where bulls stop buying, start taking profits, bears start selling, hoping for a reversal down. So when I count bars, I look for this battle between the bulls and the bears, and in here this looks like a big chopping market right here. What I see when I read this chart is we had a bull bar here. That's a breakout bar from this area. So also a spike. This bar right here was up here, traded down there. Not a strong bull bar. It's a hesitation bar. Probably this is the end of the spike phase right here, and then we move into a channel phase. So the spike phase could have gone all the way up to here before we paused, and then that's the first pullback right there. This bar and this low right here, it went below this bar's low, so in bar counting sense, that is a first entry short. Price went higher. Let's just that's a spike, a pullback, and then that's the first leg up right here. Could have gone all the way up there, and then you had a pullback. You see at some point this bar right here was green all the way up to the highs up here. It pulled back, and then you got another push up here. So now you've got a 3-push pattern. You've got a spike and a channel pattern, a spike and a one pullback, a spike up to here and a pullback, and a first leg up to here and a pullback, and that's the second leg, and then the third leg up to here before price starts moving sideways. That's a classical spike and channel pattern. On a larger time frame, this is going to look like just one large breakout spike phase right here, one large breakout bar, and then this is going to be the correction right in here. And I don't know if you see what I see, but I see a high here, a pullback. That's the first leg down, up, down, second leg down, up, down, third leg down. That's a wedge pattern. Often when you get these wedges, then one of the entries is gonna be hidden somewhere. So often when you get a second entry of some sorts, it's a 3 push pattern where one of the pushes didn't make the didn't break above the prior bar or below the prior bar. So that's just a flat pattern, and that's what we're looking for. You got this high is higher than that high right here, but you saw the spike and channel pattern ended up here. So this is all part of the correction, even though this made a high that was higher than the channel high up over here. So this is all part of the correction. So this is the first attempt to go higher after the spike and channel, a pullback, second attempt to go higher. So this is the second entry long of this pattern right here. That's down there. Then you get a pullback again, and then you get the third attempt to go higher right here. That's the end of the wedge pattern, and that's a high 3 in my book, even though the highs keep getting higher, because this pattern is the correction pattern. It's the flag pattern in here, and these are the highs that we're counting, the attempts of the bulls and the bears to either break higher or reverse down. And this looks like a sideways market right here, but if we drop down to the 1 minute chart, you see this spike and this square right here is the same square that we had. This is the same price action as we had before, and you see the high, and then you see a pullback, first pullback, second pullback, third pullback, and then prices went higher. Also, you see this has established some kind of trading range on this 1 minute time frame, and typically when you get a correction sideways, then there's more buyers in the market. If you come from below into a range, then often you're going to break out to the upside like 60-70% of the time, as you did here. A breakout, a flag pattern, which is also a small trading range, broke to the upside. So that's the technique I use to count bars. For instance, here you have this high right there. That's the end of the channel move we saw on the other time frame, and then you have the pullback, and then you have a double top. And as long as you can discern that this bull move right here hasn't continued, this small pop above this high right here isn't enough for me to say that we've got a significant new high, even though technically some traders would count that as a new high and restart the bar count. Same here, same here. I would I look at the pattern, and I look at the battle between the bulls and the bears to get tests in either direction. You got one test, and you've got the second test to go lower right here, and then breaks up again, and then you got a third test to go lower. Now you've got a wedge pattern, and so going long here is the right play. Yeah, and if you're counting the other way, you've got this spike right down here, pullback, first leg, pullback, second leg, pullback, third leg right here, and this is also a 3 push pattern. This is also a wedge. It's just tilted upwards, and then you get a change in context after these 3 pushes. Here you got 3 pushes. You got a change in context. Here you got 1, 2, 3 pushes, a change in context. Even in these small patterns right here, you got a spike, and then you've got like a pullback, 1 pullback, 2 pullback, 3 pushes, and then a change in context. That's what I'm looking for when I count bars. When is the 3 count or the 2-legged pullback here? 1 leg, 2-legged pullback. You could count that as a 3rd leg if you were looking for the wedge pattern. Just a 2-legged pullback and waiting for the higher low. Comes up over here, ready to go long. This is the 1 minute time frame. I wouldn't recommend trading this time frame, but it's just it's just good to illustrate for me how I look for price action. You got that first leg down, smaller correction, second leg down, a pullback, and the third leg down right here. If that's how you count it, you could also count it first leg, second leg, and then you got the high low right here, and that will be it. This right here has a high of 15.8, 15.3, so that's technically the first entry long pullback. Second entry long is when price moves above this bar right here. Don't want to go long above that bar. That's the terrible signal bar. This bar right here is a lot better. You see price has paused and trade down. You saw buyers come in down here. Now you saw buyers come in a bit higher, closes near the high. Bears failed to retest this low down here, so probably more buyers after this strong bull leg up, thinking, well, we may maybe probably be getting a test of this high or a measured move up, something like that. So I hope that all made sense to you. This video did get a bit longer than I intended to, but I just wanted to touch on this subject real quick. Well, I'm Claus Andersen, and you guys have a nice trading week.